You don't lose in trading because of strategy. You lose because of emotions. Fear, greed, impatience. These are the real reasons traders fail. You can have the best setup in the world, perfect entry, perfect analysis, perfect confirmation. But if your emotions are not under control, you will still lose. Because trading is not just about charts. It's about how you react under pressure. In this video, I'll show you how to control your emotions in trading so you can finally trade with discipline, clarity, and confidence. Part 1. Why emotions destroy traders. Let's be honest, every trader has experienced this at some point. You enter a trade, everything looks good, but then price moves slightly against you, just a little, and suddenly, your mind starts racing. What if I'm wrong? What if I lose more? Should I close now? And you panic. You close the trade early. And then what happens? Price goes exactly in your direction. Now you feel frustration, regret, anger, or the opposite happens. You enter a trade. It goes into profit. You feel excited. You start thinking, let me hold a bit more. Maybe it will go higher. You ignore your target. You get greedy. And then the market reverses and your profit turns into a loss. This cycle repeats again and again. And you think the problem is your strategy. But it's not. Part 2. The 3 main emotions. There are 3 core emotions that control most traders. If you understand these, you understand most mistakes. Fear. Fear makes you exit too early. You don't trust your setup. You see a small loss and you run. It also makes you avoid good trades. You hesitate. You overthink. And you miss opportunities. Greed. Greed makes you hold trades longer than you should. You don't follow your take profit. You want more. It also makes you overtrade. You keep entering again and again, trying to make more money. Impatience. This is the silent killer. Impatience makes you enter without confirmation. You don't wait for your setup. You jump in early, or you force trades when nothing is happening. These 3 emotions, fear, greed, and impatience, are responsible for most trading losses. If you can control them, you're already ahead of the majority of traders. Part 3. Why you can't control emotions. Now here's something most people don't tell you. You cannot completely remove emotions. It's impossible. You're human. You will feel fear. You will feel greed. You will feel pressure. The goal is not to eliminate emotions. The goal is to manage them. And the biggest reason traders fail to manage emotions is simple. They trade without a plan. When you don't have a clear system, every decision becomes emotional. You start guessing. You react to every candle. You change your mind constantly. That creates stress, and stress leads to bad decisions. So the problem is not emotions. The problem is lack of structure. Part 4. Build a rule-based system. If you want real control in trading, you need rules. Clear, simple, non-negotiable rules. Before entering any trade, you must know why you are entering, where your stop loss is, where your take profit is. Everything should be decided before the trade, not during the trade, because once you are in a trade, your emotions will try to take control. They will tell you to close early, or hold too long, or move your stop loss. But if you already have rules, you don't need to think. You just follow the plan, and that removes emotional decisions. Part 5. Risk management equals emotional control. This is one of the biggest secrets in trading. Your emotions are directly connected to your risk. If you risk too much on a single trade, you will feel pressure. You will feel fear. You will panic because the loss matters too much. But if your risk is small, you stay calm. You think clearly. You can follow your system. That's why professional traders risk very little per trade, around 1 to 2%. This keeps your mind stable. And when your mind is stable, your execution improves. So risk management is not just about protecting money. It's about controlling your emotions. Part 6. Stop overtrading. Most traders don't lose because of one bad trade. They lose because of too many trades. They get bored. They want action. They feel like they need to be in the market all the time. So they force entries. They trade without confirmation, and slowly their account starts dropping. Professional traders don't trade constantly. They wait, they stay patient. They only take high-quality setups. Sometimes the best trade is no trade at all. Part 7. Develop a trader mindset. Here's the mindset shift that changes everything. You are not here to win every trade. That's impossible. You are here to follow your system consistently. Losses are part of the game. Even the best traders lose. What matters is discipline. If you follow your plan again and again, you build consistency. And consistency leads to long-term profit. Stop focusing on single trades. Start focusing on execution. Trading is not just about charts, indicators, or strategies. It's about psychology. If you can control your emotions, everything else becomes easier. Your decisions improve.